Hey, good morning. It's Mike Zschunke at Berkshire Hathaway Homes and Shifton Properties on our way to Paradise Valley. Let's see, we're going to talk about residential, we're going to talk about commercial, we're going to talk about the economy, and we might touch on integrity a little bit at the end there if we have time. I try to keep these to 10 minutes, but Arizona Market Chat Live. First of all, let's start with inventory, single-family detached inventory. Pretty flat since last week. And, as Logan Metzasamy mentioned, if you're not tracking this weekly, then you're a month or two behind. But we look at it every Friday. We look at the single-family detached inventory. Maricopa County was up a little bit. Scottsdale was exactly the same as it was last week. Almost 1,400 single-family detached homes for sale. But a lot of activity coming on and off. We're 16% higher than last year in Maricopa County, and Scottsdale's 5% higher than last year. So we've got more inventory. We still need a lot more, especially this week's been kind of crazy. We've been kind of doing a little bit of everything, from helping out a agent that wants to do commercial on a 500 square foot lease to $18 million. If you're looking for an $18 million estate in Sedona, this place is pretty spectacular. I'm going to post some videos later on it, but a little bit of everything. But what's kind of hot right now is that 750 to $1 million. We're getting a lot of calls this week on clients moving to the area in that price range, and then also a couple 2 to 3 million. But we've kind of been all over. It's really exploded the last week or two, last 3 weeks maybe. But we're seeing some decent deals out there as new listings come on the market. We've got a couple new ones coming on, but there's just a lot of activity. There's some decent deals out there. Existing home sales nationwide was up 4.1%, 4.2% maybe, and prices over nationwide were up 2% from August to September. And it's funny because those are nationwide numbers. Maricopa County was exactly the same. Scottsdale was a little better. We had total single-family sales were up 10% September from August. That's closed existing family sales. So like I said, it's been busy. And prices median. Remember, median means half above, half below. It's not average. The average kind of gets skewed, especially Scottsdale with the higher prices. But median prices in Scottsdale, September, were 12% higher than August. So if you're sitting waiting for rates to come down, which they're not going to, a whole lot to make a difference, prices are just increasing. Basically, real estate has always increased the same as inflation, which we'll talk about later when we get to the economy. But it's been super busy. CNBC is pushing. I watch CNBC because I used to work with some of those people on there, and I trust them. They're a little left for me, but that's all right. We don't talk politics on here, but sometimes we have to. But anyway, CNBC as always pushes this doom and gloom. And remember, the reporters that you hear, even the nationwide, the finance reporters you hear about the housing market, those are journalists. They aren't analysts, they're journalists. They're trying to get activity, they're trying to get clicks, and that's just the environment that we live in. So a lot of things we're seeing is mortgage rate buy downs. You can buy down the mortgage rate, and it's not expensive. What's it? 1% of the loan amount is about 25 basis points. So if it's a $5,000 or $500,000 house, $500,000 loan, to cut your rate, it costs you $5,000 to get 25 basis points, which is 0.25% off your rate. And we're seeing that with some, 6% rates right now. It's not bad historically. We've had that. I think it's 6.7, almost 7% is the historical average. Yes, prices have come up, but 6% is pretty fair, I think. Lenders have to make money too. So, and there's a spread. Mortgage rates follow the 10-year yield. And then there's a spread based on risk of the person taking the loan and things like that. So it gets pretty complicated. You can't just throw all rates into one bucket. But we've been busy. I want to say real quick, pricing your home. With every deal, I have to say this. If you're the exact same house as yours, or property, even commercial, sold next door for $1 million and it's identical, don't ask $1,025,000. you're not going to get it. Because how do you search? When you're searching, most people begin their search on the internet. When you're searching for a property, if you're searching for, say, 900,000, do you stop at 900,000? No, you go to 950. You maybe go up to $1 million, but you're not going to go to $1,025,000. So when you're pricing your property, I love those even numbers. Do $1 million flat. It doesn't matter what you ask. It's where do you end up? And you just get a little bit firmer in the negotiations. You know, it's instead of, but you're going to miss out on anybody looking up to that. So I love those. You know, if you're looking 700,000, 800,000, $1 million, 2 million, 3 million, hit those even numbers, because that's what, as humans, that's what we search up to. We like nice round numbers. But anyway, commercial. Like I said, helping out quite a few agents. You know, Berkshire's never really had a big commercial presence, but the higher ups there, you know, I'm an independent contractor. I pay Berkshire a lot of money to use I believe in their systems and their name. So we're going to start growing the commercial business. Just because, you know, I do the commercial and the residential. Some other agents do, but not many. But the name, you mainly go, you have the CBREs, the big houses. But I believe in doing business one-on-one personally. And I've always, in my 54 years on this planet, the more successful people, they want to talk face-to-face. What is the nose-to-nose, toe-to-toes? Even back long ago when I was 20-some years old, H. Wayne Huizinga used to run his P&L every Friday. And everybody was about to call him, so let's have Mike do it. So I would call him, and he didn't want to get an email. He wanted a phone call. He wanted to have a conversation. 2-minute phone call, how's my P&L? And I found that more successful people and people who like to get things done, they're not into texting an email. They want to pick up the phone and have a phone call. So anyway, I don't know where I was going on that. Commercial's been busy. There's a lot going on around town. The big news in Scottsdale is Pima Road. You know, from Scottsdale heading up to Cave Creek, Carefree, there's never really been a highway or a thorough route. Pima Road is a big project. They're going to widen that. And if you're looking for 6 commercial acres, it's up in Scottsdale, Carefree, it's the last 6 acres of commercial property. I think it's off the market right now, but if you want to know, let me know. I think it's a great deal. But Pima Road, there's a lot. They have a big development project to widen Pima Road. And Scottsdale Road, too. They're putting that drainage in. I will give you a little tip. I think that's because the west side of Scottsdale Road, there's a lot of potential activity going on. That's all in the 100-year flood zone. I think that the city of Scottsdale is working on the drainage on Scottsdale Road to take that all out of the flood zone. It's going to make it easier to zone, easier to develop that. But yeah, Scottsdale's got a lot going on. The Axon project, that's kind of on hold right now. That'll be interesting to see how that goes. Vistantia, we've been spending some time up in Anthem, the northwest corner lately. There's some big industrial spec units going up there. You know, Phoenix Industrial was hot for a while, and then they kind of felt like they overbuilt. I think vacancy rate now is 97%. There were some big deals that finally got completed. So big industrial projects are going on again. Getting some pushbacks from the residents. But again, you know, Banner Health up in the Northeast 101, Scottsdale, they're getting pushback. They want to put a helicopter pad. It's tough to fight big money like that. The residents, you know, they can make a stink about it, but it's tough to fight big money like that. But, you know, from an investor side, that's what I do, more of the small investor type deals. Pay attention to where that's going, that's going to happen. And that's where you want to buy your land, do the entitlements, get your development going, because that's only going to increase value. I always say follow the big money. And remember, commercial is all about financing. It's, can you borrow money at a lower rate than you can make money as a return on your money on your investment property? And that's more the commercial. Murphy over at Ammo AZ, he's still got the 4,600 square foot lease. If you want, let me know. I don't do a lot of leases, but I'll put you in touch with him. And there's a lot of stuff off market, especially commercials and old boys club. And I think that's kind of why I'm getting a lot of calls from a lot of younger agents now. Mike, how can we work together on this deal? They don't know how to do commercial, and there's no MLS. It's just kind of who you know and your network. And I've grown to have some good connections in that department. So I enjoy it. It's fun. I always like to help out the younger agents and things. Economy, CPI this morning. We haven't had government data since the shutdown. I don't know if anybody really misses it, but CPI report, Consumer Price Index, up 3%. You know, when you're talking about the economy, it's all about expecting. John Kuhn, I would be trade support, I guess, for him. He was big bond trader, and he always said, doesn't matter what the market data says. Our job is to, as a trader at that time, what are the expectations of everybody else, and learn to read the other people's expectations. So anyway, CPI came out 3%, a little bit lighter than they expected, but still higher than the Fed's 2%. You know, that just means inflation is growing at 3%. It's not growing 5, 6, 7%. So it's still there. It's still something to consider. But the market's kind of focusing on the softening labor market, especially we're not getting a lot of data right now. 10-year bond yields bouncing around 4%. They dropped right on the news this morning. Stocks went up because they see more investment with lower rates. And there's a lot of moving parts there. I think 4% on the 10-year is fair. You know, the investors have to be rewarded for investing money for 10 years. Does that make sense? And that everything's kind of based off that. Like I said, the Fed funds rate doesn't really matter to you and I. Just kind of like a snowball rolling downhill if it goes down. But you know, it's fun to watch. The economy. Let's see, what do we got? It's trading versus investing. I'm not into trading at all. It's just become kind of gambling with ease of access to the markets, and anybody can sit on their mom's basement and trade stocks like that. So be careful with that. Investing slow, long term. Whatever asset value you like, whether it's real estate or bonds, that's how you build your portfolio. So, you know, you're going to lose long term on fees and things if you flip and trade in and out of the market. But investing, I don't remember who was talking about it. Investing is long, slow term, building wealth like that. So it's rolling along, you know, spending. People are spending. Credit card use was up 7%. I think the Wall Street Journal had an article this morning. Spending's up 7%. So people are out there spending. We had good earnings this week. This economy's moving along. There is some questionable credit cracks. You know, is that going to happen? It doesn't matter. You know, I think the 10-year yield's going to close over 4% this afternoon. But like I said, that's just a guess. Nobody knows. But anyway, that's it. Just want to talk about integrity real quick. You know, everything's online. Like I was talking before. Know who you're doing business with. I hear about a lot of fraud. My wife just had a friend that kind of got taken for some cash on a person she did business with that she didn't know. Had a realtor knock on my door this week. It was interesting. I'm not going to put any names out there. I didn't tell him who I was right away, but I don't know him. I know his brokerage, and I don't have a very high opinion of them. I'm not going to say who they are, but they rhyme with 72 schmold. But anyway, just a liar, lying the whole way. Knocked on my door, said, "Hey, would you like to sell your house?" Lie. Didn't know I was in the business, and just God, it kind of burned me. But there's people out there giving this industry a bad name. But anyway, you know, that's why we like to know our clients, know who we're working with. That was big in the investment field. You know, we've got clients now. We're running around. We're previewing a lot of properties. And we're doing, actually, I started doing for a couple clients, just raw walkthrough FaceTime live videos. Because what you see online, you know, it can look pretty. And that's why I do these live. Just wing it. They're live. You get to know me. I get to know you. And, you know, unedited. So, I don't know. Anyway, we're here to help however we can. Residential, commercial, land, investment properties. We've got a super busy day. We've got a lot of properties to jump into. I got a couple showings. Got to get these listings ready. So anyway, if we can help you buy or sell anything to do with real estate. This week, we got a lot of questions from other agents, just how to work through deals. And it just comes from experience. So if we can help you, give me a shout. Thanks for watching. I appreciate it. Have a great day. Be smart, be safe, and we'll talk to you soon. Bye.